Okay, perfect. Today we're going to look at very interesting industry because everyone is kind of involved somehow with that type of industry because everyone is employed, and sooner or later we always face the choice of getting a new job or something like that, and that's why it probably makes sense to have a look at this particular industry and what companies are included in it. Now, before we start, of course, I want to ask you to read this disclaimer requirements here in Australia and put a green tick if you read it through and you understand that you need to make your own decision before you purchase or trade any shares and to do anything like that. Okay, so that's our masterclass educational purpose, and it doesn't give you like advice that you have to go and buy these particular companies. All right, so guys, if you understand that, please put a green tick. Okay, so let's start. So we're going to look first of all at current market situation, what is happening in the market. Then we're already going to look at the pros and cons of investing in recruitment industry. Then we are going to look at three companies actually, not two companies, Robert Half, Corn and Ferry. And also we look at one company just as an example to show you how tricky sometimes like reports could be, so and where you have to have a look in order to understand it like correctly. Okay, and then we're going to look at possible trading or investing strategies with these companies, which you can implement if you analyze these companies in details. Okay, so let's go. Uh, we're going to look at three indexes. So one of Dow Jones Industrial Index, we can see that it's kind of forming a triangle. So we can see that the tops are going lower, lower, and lower. Each high is lower than the previous high on each roll. Okay, but starting from February, last February, we can see it's kind of growing, but it's kind of stuck here on this particular level. Probably market is waiting for elections in the United States. I presume next week it might become volatile. So if you're in cash right now, so maybe it makes sense to stay in cash and wait until you see how it react. If you have already some companies in your list, so it probably will give you great opportunities to enter positions if the stock market will pull down. Because if the at the moment it's on a previous highs, so that's the line which was previous high, so it's previous resistance. We can see that starting from April, index was holding this level, and now it becomes a support. So if it managed to hold this support, and if the market reacts positively on the news like election and etc., so it might move up, right? But if it breaks through, so I won't be surprised if it goes to 1725, 1700 and 17,250, and if it breaks through that, so it can go to this level. So in this case, please keep an eye on that, what is happening. So if you're in cash, you might want to stay in cash at this particular moment, unless you're 100% sure about your company and you want to keep it for a long, long, long time. Okay, long term. Okay, so that's the index Dow Jones. Let's have a look at S&P. S&P is really similar situation, so exactly the same. So we can see that previous highs, previous resistance become a current support, and also the highs, they're getting lower, lower, and lower, so and forming some kind of triangle here. And usually at the end of this triangle, usually the price breaks through down or up. Okay, and it probably will be based on like some kind of information at that particular moment. So again, so it's very unclear. All indicators also unclear. So we don't know where the market is going to go in the nearest future. But I won't be surprised if it pulls down back to 2000 level, or maybe even lower to 1800 level. So it's about 15% downturn. So probably possible, same as it happened last August and in January as well, January, February. So I won't be surprised if it happens something like that. Okay, if we look at Nasdaq, Nasdaq has different story. So it still just broke through the previous previous resistance. It's tested here, and now it's holding this position. But we can see it's still going up. So Nasdaq includes in itself different type of companies. Mostly it's tech stock, and we can see it's affected in a different way. It's although it had drop, and actually it had much bigger drop in January, February, than S&P 500 and Dow Jones. I think those two indexes they had about 15% drop. This one had about 19% drop. Okay, so and at the moment we can see it's still growing, and if it breaks this level, so we can expect that it might go even higher. Okay, so but indicators again, so they're in a neutral position, so and it shows us that it can go down and up. So we cannot say whatever happens with Nasdaq, but I presume it will be affected by election as well. So we'll see. If Brexit affected market in such a term, that's was Brexit. Okay, so that's could be another theme. Okay. All right. Do you have if you have any questions regarding markets, so you can post them now, and I'll try to answer them. And but always try to understand that indexes, first of all, you analyze in order to understand the general move of the market. It's like if you're planning to buy something in a shop and you know that Christmas is coming and it would be a Christmas sale there, so you might as well to wait until this Christmas sale starts. Okay, what's the point to buy a couple days before that when everyone is buying presents and probably you will overpay. So it's much better to buy when everyone is already bought presents, Christmas gone, and Christmas shopping started, Christmas sale, and you can get everything on discount. So that's why you need kind of to follow the general market overview. Okay, so let's go further.